Well, welcome to the Beyond Wealth podcast and the Flip Side podcast.
We're both here.
We're both here. So, Blake, thank you so much. We're collabing on this, Birmingham market update. We have shared the podcast space, studio space, for a good part of a year, and we actually just moved it into a new location to one of your actual commercial properties that you own, and there's some vacancy. We may eventually get kicked out, which that would be a good thing, right?
Good and bad, yeah.
And so anyway, we're going to go over the stats for November and just talk about what's happening in the market moving into the new year and everything. So let's just start with what's been happening, though, in your life. Two things I'm really excited about. One, the first one is that you just closed on a single-family home and land adjacent to your house.
I did. I broke my own rule, right? So we're in a mastermind together, and we set goals, and this whole year, 2025, was no shiny objects. I'm not buying a single-family house. I'm not doing it.
All 2024.
I made it 11 months, right? But no, this one's special because it is across the street from me. We're on a dead-end street, and it comes with like 3.5 acres of just woods that literally the street dead ends into, which is all developable, right? And so it was kind of if I don't buy it, someone else will and build houses and kind of destroy the piece that we've got. Kind of first world problems, right? But we've got such a unique spot where we are that I really wanted to not have it change. And the only way to do that was to buy it. And so luckily the neighbors were super nice, and we worked out a deal to where unfortunately, I don't really need or want the house, but it was kind of a package deal. It's all or nothing.
Yeah, you want the house, or you want the land, you get the house.
Yeah, because the land, I just want to play on it, and again have not someone else develop it. But came with the house, and so now I've got, and I paid arguably above market for the house, or definitely at market value. It wasn't a deal. I felt like I probably got a little bit of deal on the land, and so it'll balance out. But now I've got to figure out what to do with the house. Yeah. Right, and so I've brought so many friends through while we were on, because I wrote the contract on the house as assignable, where I could not necessarily wholesale it, but I wanted to be able to pick a friend to buy it and hopefully close instead of me. Couldn't find anyone to meet the timeline, and so I'm actually showing it again tonight to a friend. I've got 1 or 2 people to look at it again. Maybe you need to come look at it.
Yeah.
And then if no one bites, then I'll just put a tenant in on short term, 1 to 6 month lease, and while I let them pay for the mortgage and find somebody to buy it.
That's awesome.
Yeah.
And so you also had another flip that was on the other street behind you, and it had a little bit of adjacent land, correct? And so you parceled that one off. What was that, a year ago?
Yeah, that was not this year, because I'm not buying any houses. Yeah, that was last year. It came with an extra lot behind it. So that house was like behind me and diagonal. So it came with a lot that was technically on my street continued, but where my street dead ends, it just goes into woods. And this was the first lot on the right that it goes into. And so same kind of thing, flip the house, kind of broke even on the house. Didn't really make any money, but the lot was free, and kept it just so no one else would develop it. So now we're kind of making a compound back there. Pretty soon we'll get a gate up. No, but
that's awesome.
Yeah. So it's fun.
I love and you're similar to me in the sense that you create, you find solutions and then end up creating kind of a problem, and then you find solutions for that problem. So subsequently, we're sitting in the mastermind group, was 2 or 3 weeks ago, and you're like, guys, I think I'm buying some equipment because I got to clear land. Yeah. And you kind of rabbit trailed, like, what would it cost to rent to clear this land? What would it? And then you're like, what if I just bought something and rented it out? And then all of a sudden, within a month, you built a rental company for equipment.
Yeah. I mean, the quick and dirty is, hey, I need to rent a piece of equipment to just clear this out, to I'm going to buy 2 pieces of equipment, 3 trailers, and a truck, and start a rental company. And here we are. It's very, very selective. I did a lot of due diligence, which is unlike me. I usually jump out of the plane first and then find my parachute. Right. But caught a lot of landscapers that I know just in the industry, and talk to people like you and say, hey, who's a good landscaper? Called them and say, how often do you rent equipment? What kind of equipment do you rent? And then kind of bought based off what they look for that would still match what I'm wanting.
Right.
And bought 2 pieces of equipment that came off that feedback. And I literally took delivery of each piece of equipment different days, and that same day it went to jobs for landscapers that's been 2 weeks ago, and I haven't seen them since.
That's crazy.
It's just staying rented, which now presents another problem. Is I'm ready to clear this land, and I'm not going to get it back.
You mean you need to still rent equipment?
Yeah, I'm going to have to go rent something. I'm like, wait a minute, I just did a full circle. But
it is interesting because to me, it's less, and not to like knock your everybody rents equipment.
Yeah.
But your network of community has gotten those rentals going.
I was thinking about
like,
because I was actually in the very early stages of this. I was talking with someone, told them this idea, and like, well, how in the world are you gonna? And that's where I was thinking about the network. I was like, really, I think that's the value.
The powers being in the network.
Not. I mean, anyone can go buy this equipment, do exactly what I'm doing, but without that sphere of really rental potential people or customers, you're just one other person. So.
And I thought a lot about that, is like really being honest with yourself and figuring out like what are my skill sets, what's my network, and really, everybody's like, oh, I want to get into real estate. I had just actually a banker just text me today, and he goes, I want to flip houses in 2025. And I texted him back, and I was like, a lot of people want to flip with me, but part of it was like, okay, do you have a deal? Like, what are you bringing to the table? And like really self-evaluating, what your value is. Because I think everybody can bring value in this space, especially if they're new and they want to get into real estate. We have conversations with clients all the time, like, I want to do an investment property next, all the time. But it's like, you have a good evaluation. Are you good at money? Are you good at running numbers? Good at running projects? Do you have a construction background?
Yeah.
Are you good at finding deals?
Yeah.
So there's always something you can bring to the table. But that's what I love about 3 acres equipment rental.
Yep.
Is you're just leveraging your network.
Yeah.
And so
and that's where the value is. So we'll see where it goes. Like I said, we're a couple weeks in. Hopefully it doesn't crash and burn 2 months from now. But if it does, we'll sell the equipment, sell the stuff that we bought, and probably still come out positive because of the rental income in between now and then. But, so I look at anytime I'd kind of dive into a crazy idea like this, I'm like, all right, what's the actual worst case?
Right.
And,
yeah.
And same thing with buying a flip or buying this building or whatever. It's like, what is worst case? And if I know I'm buying it right, if it's a property on the front end, I'm setting myself up for some kind of success or not that bad a failure.
Right.
And so that's how I look at it and evaluate. And that's my really quick trigger of, okay, worst case, it's not that bad. All right, let's go.
Yeah.
What are the details? I don't know, but I know it can't be that bad.
let's roll. All right, so that's amazing. I'm really excited to see where that goes.
Same.
We'll figure it out.
Time will tell.
I think it's going to be great. So let's talk about the stats for the new year. I want to kind of talk about what's been happening. Obviously, we had an election that solidified. Some market reacted a little bit to it, but I don't think we're going to see really stuff until spring. I'd like to we don't have crystal balls last time I checked, but it'd be good to kind of project what we're thinking.
Yeah.
So listed year over year is up 5.86%, which is very positive, I think, overall. I am kind of curious as to your thoughts on, if we've reached what would be considered a normal for market listings kind of getting back, because I still think we are overall not in a surplus of supply.
Yeah, I think so. Last year was when the rates kind of quote unquote spiked, and so there was a pause. I feel like a lot of people shifted back on I'm not sure I'm going to make a move, and now we've had almost a 12-month cycle since that happened, or more than 12-month cycle of this is a quote unquote new normal. And I think people got on board with that who were, hey, I'm going to wait till rates come back down, or I'm going to XYZ, and it just didn't happen.
Right.
And so I think we're seeing that increase, that almost 6% increase in listings, just because people are like, okay, well, here's where we're at. Now we just got to move forward. Right. So I think a lot of that's contributed to that.
There's definitely a lot of people who were holding off listing their property or making a move and just like realizing, I saw on TikTok, I think I may have mentioned this, on this podcast before. I just thought it was so hilarious because this younger guy, and he was like, when are rates going to be back at 3%? And I just was like, never. Probably not in your lifetime. That was like a once in a lifetime occasion, and you have to reset your mentality that you didn't miss the boat. It was a fluke, and that's what it was.
Well, and here's what, this kind of digressing a little bit, but you missed the boat on low rates. But people, that's all people are going to remember. Dang, I should have bought so much then. prices were skyrocket high back then, right? So what is the quote unquote low rate today? Where's the opportunity? Because there's always opportunity in every kind of market.
Yeah.
It's just maybe it's not a low rate. So what is it? And answering that question is, I think, how people like you and I continue to grow our business and get ahead, and not just sit there saying, dang, I could have done it, could be in a better spot, so I guess I'll just sit here now.
Right. Yeah, without action.
Right.
I think, and it probably is a little less now, but I think one of the market opportunities is houses that need renovations, but are not enough of a margin for a flipper to buy and sell fully fixed up. And it's not to say I'm not an advocate of the DIY person, because oftentimes the quality is not there. But if you have a little bit of surplus of cash, can pay some guys, and then willing to be pretty much break even on your project and equity grow, you can get into some really nice areas for about a 10 to 15% discount.
Yeah. If it's for yourself.
Yeah. For yourself.
Yeah. And investing in that, outside of the financial, there's other reasons to do that. But yeah, I completely agree. I think there are quote unquote deals, not as an investor, but as a owner occupant, to go in there. If you're willing to go through all the pain that accompanies living in a renovation, but if you're willing to do that, there's some great deals out there for sure. I think we're going to see the same reasoning in buyers. While buyers were like, hey, I'm just going to wait on rates to, right? Just like on the listed side, we're going to see that go up. We're going to see the amount of demand, like you said. Supply still hasn't caught up to where demand is, but we're seeing demand also edge up as supply is, because people are saying, hey, I'm not going to see a 3% anymore, so let me just go ahead and get in the market.
Right. Yeah, 100%. So solds year over year is down 3.34%.
What do you think about that?
I think it comes to, we're sitting, this is November stats, and the election, there's a lot of people just sitting on the sidelines. So I think this is just purely based upon this election cycle. Yeah. And as we all know, there's very few properties that really close within, 2 weeks that are cash and all that. So typical transaction times are sometimes 1.5, 2 months, even. So this is the byproduct of everybody kind of halting a month or two before elections. The market just slowed significantly. And so the closings are down because of that year over year.
Yeah.
So
I felt that in my very small micro business compared to this whole statistical table, but the 2 months leading up to the election, I was probably the slowest I've been in a couple of years.
Yeah,
and that was the reasoning, not necessarily, not to get political on either side. It wasn't just if this person wins or this person wins. It was more of, I just want a resolution. Like, I'm just holding until something's decided. And since a month ago or close to a month ago, the results came out. We've seen a flood of inventory, and we've seen, just, again, regardless of political party, it's just everyone was waiting. Now they're not.
Yeah. Very positive here. Medium sales price is up 7.65%, which is really high. Yeah, it's really high. It's really high. And we'll look in the sub-markets and see, sometimes you see like where that's coming from. Sometimes I've seen Mountain Brook this past year be up at 14%, some crazy stuff, and other markets are down like negative. So, but that is a very high overall medium increase. I don't want to speculate. I usually like to see that number over several months to say, oh, our appreciation is climbing. Yep.
Yeah, I can't just have 1 month.
Yeah, let me look to see if this will pop up. I'm not connected, but
one thing to go along with that is Mountain Brook specifically, but really like kind of that 750 plus price range.
Right.
We don't have the data, but just again, in my tiny sample size, I'm seeing a lot more cash transactions in that price point, and $1 million plus. Yeah. Which it always surprised me just how much cash is out there. Like, right?
Yeah.
I mean, people, because if you're buying a $1.5 million house, you don't want to pay 7%. You don't want to pay 6.5%. Yeah. If you've got the cash, people are putting it out there. So that would be very interesting to see the cash transactions year to year and that change as well.
Yeah, because they're looking at, like, I could put in the market. What is the best opportunity cost? Because I would almost say that their plan is not to have it in that house long term.
Oh, rates come down, refi, cash out. Oh, yeah.
They're going to pull that cash back out. But for the time, this is the best place for me to get a return on a safe return on my, I'm guaranteed 7% back on my cash.
Yeah, that's so interesting.
So,
and hey, if you're in the position to do it, props to you. Right?
one day, right?
That's
After
right.
3 acres takes off.
Yeah, that's right.
Okay. List to sales price was down 0.67%.
Yeah, just barely.
Yeah. So I think, it's a very minute transition. I don't think we're seeing these. What's interesting is we're seeing a overall appreciation on the medium sales price.
Mm-hmm.
But then we're seeing that once it's set, the list to sale, they're staying pretty much where they are, which I think is a we're not in bidding wars is basically what that says.
Yeah.
So,
but in the reverse of that, which kind of coming into the next stat on the days on market, is we're seeing an increase there.
Yeah.
Of
27%.
Yeah. I mean, a significant increase on days on market. Now 11 to 14 that percentage, it's still small, but usually with that comes a smaller sales price versus list price. And we're really not seeing that be affected, which that's pretty interesting. Things are taking longer to sell, but they're still selling at what people are asking.
And I have had several clients. I actually just had a conversation today with a client who's like, hey, I know I didn't hit the market at the right time. Like, it is what it is. I can't control that. I can't control these elections. I can't control, but we've had enough activity, just no contract. I think I'm close on price. I'm not willing to drop it yet. And I'm not in a rush. And so obviously not everybody's in that position. Not everybody can throw $1 million at a house.
Right.
But there are a subset of people who can wait for the market to come back to them. And then where you can find opportunity is the people who can't wait. Oh, I've got to move for a job. Oh, I need the cash now.
Yeah.
Like, big swings like that. So, all right. So let's pop into the subsets of it. So Mountain Brook, Vestavia, and Homewood. Listings are down 2.56%, but solds are up 14.71, which is very counteract to, it's the numbers are opposite of the overall market.
Yeah. Yep.
So I don't know how to explain it, but this subset of market just acts differently than the rest of Birmingham.
It really does. It really does. I mean, there are other A-class areas, but that is your most expensive, your average sale price, all that's going to be the highest in this market here.
Yeah.
And I think that just goes along with all the other stats inside this subset.
Yeah. And then the following, which is interesting, our medium sales price is down 1.95%. So definitely not a significant drop, but year over year, we're in a negative in one of the most dominant, predominant increasing, where, like I said, I've seen 14%. So, that's another number I like to not push. Like, we're in decline.
Yeah. Yeah. Let's see a trend.
Houses are still selling, obviously. But I think maybe they're just, some of them are being more realistic about pricing.
Yeah.
Because we've seen such jumps in some of these pockets, people throwing cash at it, and the price is getting crazy. And then medium days on market 3 to 4, which is an increase. I've had previous months where that's 0 to 0.
Yeah.
So definitely a little bit higher. Stuff is sitting a little bit higher.
Yeah. Well, and looking at your sales price versus your list price in that ratio, while I mean it's decreased right under 1%, so not a big change there. But it's what's important to look at is it's over 100%.
Yeah.
Right. And so. Now, and you still have your average days on market, medium days on market higher this year than it was last year.
Yeah.
And so you're still seeing, hey, it's taking longer to sell, but you're still getting at least what you're asking, and in this case, more.
Yeah, it's good. Shows for show market. Okay, so Pelham, Helena, and Alabaster. I think these are good grouping of properties. So listing is up 30%. So
Crazy.
That, to me, that could have been a subdivision. In
I was going to say,
pockets,
a lot of that's probably new construction. Helena's blowing up. All three of those cities are
and
just
we'll see
building
those
like
climbs
crazy.
just every 3 months, and it'll taper off. And then, so I probably should track new listing, like new subdivision, new builds coming in that pocket, because it happens so often.
Yep.
Solds up 9.46% once again. And a lot of times what people, if you don't know, if you are looking for a new build, reach out to either one of us, because a lot of these builders, if you work with them, provide incentives on the lending, especially if you use their lender.
Yep.
You get a percentage drop down. They do what's called a buy down, and they spend a bulk of money up front with the lender to buy down every single mortgage they write with their product, with their home. And so you could get up to you can get in the fives on a 30-year,
Yep.
Depending on what they're offering.
Yeah.
So that's probably a lot of people buying new construction.
Yeah, a lot of new construction there. What's important, and kind of a side note on that, or to add to it, is depending on the builder, and this is why it's important to work with not just any agent, but an agent who actually, like one of us, one, knows construction, but two, are familiar with the good and the bad builders around.
Yes.
Because the bad builders also sometimes partner with not the best lenders, even if they're offering really good incentives. So if you, like we have our own lenders that we recommend, and a lot of times they'll match.
Yep.
Sometimes they will. And so, not all lenders are the same. Of course, not all agents are the same. Builders are
And
the
there's
same.
sometimes fees that
They'll hide them. Yeah.
They hide the fees
Yep.
somewhere in the structure of it. So yeah, you're not paying 5%, but you are paying you're getting the 5% loan, but in the amount of fees you're paying, you're almost buying down that percentage.
You're paying for it.
So
yeah, and that's unless there's a builder, like the builder has actually taken action, like you said, about buying that down themselves. If it's just, hey, we partner with this lender and they're offering X, Y, and Z,
Right.
but there's nothing between them, that consumer's paying for it.
Yeah.
In one way or another. It's hidden somewhere.
You're paying
right?
the piper.
You are somehow. And so that's why, even if you end up going with that person, talking to one of our lenders and just give them their rate sheet, and they'll just say, oh, here's where it's hidden. And they'll show you and say, here's how I can match it, or actually how I can beat it.
Yeah,
That's really important.
Yeah,
So.
100%. Medium price is down 3.51%. And that's interesting too. I would say that a lot that comes down to some of these, not all, but I would say some of these new construction, they're wanting to get it sold.
It's end of the year,
Yeah.
and they're dumping product.
Yeah.
I mean, one of the big box builders here in town, I got a message the other day from their sales rep saying, we're offering 8% commission to you as the buyer's agent. 8%.
Oh, wow.
That's
Like
insane.
bring us
Like a
buyer,
$300,000
please.
house. I mean, that's $24,000 in commission on a $300,000 house.
They're trying to get
That
some.
is insane.
Yeah.
And they're just trying to dump inventory because it's worth it to them to pay that much just to get off their books by the end of the year.
Right.
So it's just like a car. If you're going house shopping or car shopping, you're going to get the best deals at the end of the year. And that's what
Yep.
this data is reflecting here.
Yep. List of sales down negative 0.65%. Not a
about
huge,
the same, yeah.
not a huge change there. And then average days on market, or medium days on market, year over year. This is significant
This
in
is
this
huge.
pocket. 6 to 19 days. So that's a 216% increase,
Yeah.
which is significant.
Yeah.
So why do you think that is? Do you think that I think, I'll surmise and then tell me what you think. I think some of that is some of the stuff left over from the summer that's just subpar. In those pockets, there is some things that people overprice it, A, and B is not fixed up, and it just sits. And then you have stubborn sellers, and they just leave it on market, and then all of a sudden you have that could be throwing that number way higher. You could have something with 200 plus days on market easily.
Yeah, I think you got some outliers that are factored in here that are definitely pulling that up. Kind of same answer. Leading into November, a lot of things were sitting.
Yeah.
I've got a couple listings that are sitting, and that now activity's starting to pick back up. And so I think this is just skewed a little bit because of that.
Yeah.
But it's significant.
It is. It definitely is. Okay, so Adamsville, Centerpoint, Roebuck, and Graysville, one of the last areas we'll look at this episode. So listed is up 8.82%, which is great.
Yeah.
Sold down 34%.
Yeah, that's wild, isn't it?
I'll be honest, and this is something that I don't know if I'll do a year-end episode or not. There's been a few trends that have kind of happened. And this pocket, I keep looking at it, and it's just not as vibrant as it has been in the past. And I don't know if it's specifically Roebuck, if it's specifically Graysville, Centerpoint. It may be one pocket that's really pulling down. But in general, if you look year over year of the past 6 months, it has not been performing well. And so, anyway, things are still moving. But it's just definitely not the pockets that are progressing.
Yeah.
Going back to medium sales price, we're down 3.16%.
Yeah, and same
on
trend.
appreciation.
You're seeing that trend come across all the way through there. Things aren't selling as well. Things are sitting on market longer, not selling for as high of price. And it's I think it's because this is a somewhat of an investor heavy market here that we're talking about. And if you flip back to kind of what we were talking about earlier, those higher interest rates that's kind of pricing people out on being able to buy these from a rental standpoint. It just kills your cash flow.
Oh, yeah. I mean, I have seen a huge pullback in people buying occupied properties and unoccupied for investment.
Yeah.
It's just really hard to make the numbers work at, you know, because investors typically are about a point above where the current rates are at. And when rates are at 7.5 or wherever in the sevens, it means
it's hard to make work.
You're buying at 8, 8.5, sometimes 9. Depending on where you're at, and it is really hard to make the numbers work.
I've got
cash flow.
One of my favorite clients is an investor who, about a month ago, every year, kind of going into end of October, going into November, he calls me and said, "Blake, I got to buy 4 houses. I got to spend $800,000 for taxes." And he makes a bunch of money in a different business, and I'm kind of his tax avenue. And so, and we did it. And I want 10% cash on cash. And this year, it took more offers than we've ever had to make to get those houses under contract. And it's because everyone's kind of sticking to their price, and it's just the numbers don't pencil.
Yeah.
And we're getting loans on them. And so we're getting loans on some of them, but it just doesn't pencil. And so we're making offers at 20 to 35% below list price. Some of them are hitting, some of them we're negotiating through, some are falling off through inspection.
Right.
Because we get. And he's not scared to do work. If we lock it up at a 12% cash on cash, he's got that kind of 2% to play with on repairs and whatever. But yeah, it's tough. This has been the hardest year to get stuff actually locked down for him.
That's interesting.
Yeah. So
does he buy a lot of single family, multifamily?
All single family.
Okay, gotcha.
Yeah, he's bought one, I guess, kind of quote unquote 6 unit. Is one of those massive houses in South Side that's been chopped up over the years in like a little apartment style, right?
There's a door on every side of the
literally,
house.
It's somewhat like a main entrance. It's so choppy. But and that one, the return's great on it because he bought it as kind of a single family purchase, but then it's really a 6 unit.
That's crazy.
But no, he doesn't go multifamily, just really single family. And in this kind of market as well. Like I say, he picked up one in the South Side, which is B plus or maybe sometimes A. But no, mostly in C class. And that's you're not going to find 10% cash on cash in a B or A market.
No.
I mean, if you do, you got a unicorn. So
no. Yeah,
it's going to be in this market, which again is tough this year.
Oh, 100%. So this is the part of the episode where everybody who doesn't want to hear me and Blake just kind of BS a little bit and just talk about it. But let's talk about the future.
Yeah.
We don't know, obviously, what is going to happen. But I think that we know enough about, we've seen market cycles. We could theorize a couple pathways forward. So I want to get your opinion. We have an election. We have, Trump's president elect. Rates, the Fed said that they were going to do a quarter drop. I think they have one more meeting. The Fed said they were going to do another half a point before end of year. And the most recent one, they did a quarter drop.
Yeah, we're not there yet.
The expectation was that they were going to do that half a point, on this last meeting.
Yeah.
So I think there's one more opportunity, I could be wrong, to do a potential another drop. But the next year, their pathway is to do a whole nother point. Now, whether they do it or not, they don't commit to these things. But that's their pathway of like, hey, we want to be up at this place. What do you think the spring looks like? Is the Fed dropping rates, or are they holding? And then what is the housing market doing? Are we going to start to see that continued, supply get back on market and houses moving and all that?
Yeah. In my opinion, as long as Jerome Powell remains in where he's at, which it sounds like Trump's going to keep that going. It was kind of like back and forth on if he was going to replace him. The last I read was he was going to stay. He doesn't seem one to make big jumps, just given his history over the past few years on the changes he makes. And so I don't expect anything drastic and big. I think I personally don't think we're going to see another drop this year. I think the economy's responded more than they anticipated with the smaller drops they've done. So they're like, okay, let's not move things too much. Let's do that and let kind of back up, let things settle. And I think that's going to be the trend going into the first Q1 and Q2 of next year. And so we might see another quarter point, maybe middle to end of Q1 is what I'm thinking. And I think we're going to see the data as we do these market updates and our businesses kind of trend in the same way.
Yeah.
Right. As we're still going to have more demand than supply, but supply is going to just continue to try to increase more and more. But that all the stats we just talked about, I think, are going to remain fairly consistent.
I think too, like, we will see the mindset of the purchaser and the seller of houses kind of reset. Mm-hmm. You know, people need to kind of figure out, like we talked about, like rates are not going to be at 3% probably ever again in your life. Mm-hmm. I'm okay with that now versus like a month out from missing that rate. You're kind of like, oh, that hurts, you know, like bummer. So I think the spring will bring another flood of people who are like, all right, let's get rolling. Let's get back to life. Let's keep moving. We've already seen that a little bit, but I think it's going to continue to increase as well. And then I kind of wonder too, there's this growing trend of, you know, people in different life circumstances. I think the younger generation moving up wants experiences more than a house and all that. But I think some of that will also shift just as people mature and have kids and stuff like that. So I have good expectations for the future, but I'm not bullish on the economy right now. I think it's going to be moderate increases at this point.
Yeah, slow trend up. I think it'd be interesting to see the average age purchase for Birmingham.
Yeah.
Right, and I don't know where we get that stat, but that would be interesting to see because I think it has creeped up. And gosh, I mean, imagine I paid 10 years ago. I paid $190 for my house, and it needed a lot of work. But I mean, that exact same house now is $330.
Yeah.
There's not a chance in the world I could have afforded. I really couldn't even afford $190 when I bought it.
Yeah.
And I was 24 years old, which I think is probably younger than the average. But even if, I mean, gosh, today I can't imagine spending $450 on a house, right? I mean, just that's a $3,500 payment.
Yeah.
That's crazy. It just blows my mind that's now the standard for your first-time home buyer coming in the market. In some of the markets, now you can go, like we talked about, some of those subsets of down to Pelham or Alabaster, but you're still paying $285, $300 for a good single-family home.
Yeah.
That's tough.
It's tough, and at the price of interest, money to borrow too. You know, I think that comes down to the affordability as well. You know, it's like, you know, I'm fine with buying a $1 million house if the payment was like $1,000 a month.
Yeah, hey, put on a 100-year amortization. Let's go. Ride it out.
So yeah, I mean, I think the monthly payment comes down to like, how much are my groceries? How much is my monthly, payment? How much are utilities? All of those things, the basics. Everybody talks about, this whole, appreciation, cost of living, and it being below 10%. But if you look at all of the pertinent things to life to survive, a lot of them are well over 10% of increase in pricing in the last several years. So there's a lot of people still feeling that tension.
Yeah. Well, if you're a first-time home buyer and you're thinking about buying a house, you don't have a house yet, the best thing you can do is get with a financial planner and look at a holistic view of your finances, because a lender is just going to tell you exactly what you just said, your PI and TI, right? Like, that's it. They're not looking at your groceries and your lifestyle and your car and your all that, and they're not going to advise you on that. Most of them won't. And so you need to understand, just from a basic standpoint, of what can you afford, because the bank's going to tell you your max. What should you afford? Yeah. And that's the best thing you can do before really you even call us, is get that figured out so we can go shopping.
Yeah. Love it, man. Well, lots of information in this episode.
Yeah.
Even in the back end,
Yep.
But I'm excited about the new studio. Took a little bit of a hiatus, but I'm getting back to bringing in guests. I know that you are as well.
Yep.
With this transition, we're both excited about. So,
well, man,
be checking out the podcast.
I'll tell you, you mentioned in the beginning of this that we're in the building that I purchased last year, and there was an in between period where we had to leave our old space. We didn't know where we were going to go. We were looking at different options, and you're probably sitting there staring at me like, Blake, you have this big building that's empty. Half of it's empty with executive office spaces, and you didn't say a word. And it took me 3 weeks to be like, oh, wait a minute, I have empty space.
You laughed.
You were probably like, duh.
I didn't think about it. I honestly didn't. I was just like, I don't know. I've been busy too with some projects. I've had a flip, and I'm doing some more land development now.
Yeah.
So I think we're both just very busy,
Man,
which is great. Which is the crux of even getting these episodes out is we're doing business.
Yeah, but there was a few times I actually devoted brain power to think where could we go, and this never came. It never hit, and I was finally like, oh, wait a minute.
Yeah.
I think we'll have
to talk about the deal sometime. But this is fun. I think next year we're planning more episodes. Both of our podcasts are. And I think we're planning more collabs like this because we do so many deals. Mm-hmm. I think it's beneficial. A lot of times we bring in people and we interview them and have those conversations, but we are doing a lot of business ourselves. You know, I'd love to hear more about how you bought this building, And so I think we'll be doing more of that, of just breaking down some of our own deals and throughout the years.
Have a good constant. I think that's awesome because we can get to into a lot of each other's deals that we haven't really talked about. So cool.
Awesome, man. Well, Merry Christmas.
Merry Christmas.
See ya.